Kevin, let's talk about the latest tariffs, threatened tariffs against Mexico. What do you think of them?
Well, I think that the president is dealing with the immigration crisis that I think he appropriately terms a crisis, and he's serious about trying to get the Mexicans to the table. They have a list of material things that the Mexicans can do that it's a little bit puzzling that they haven't been doing, and I'm really heartened to see that they're coming to town to talk about that. I think it's very manageable for the Mexicans to fix this problem, and I think that's one reason why the president decided to try to get them to the table.
Are you a fan of tariffs being used for something that isn't really an economic problem?
Well, I don't give advice about things like border security, but I could say that, if you look, that the Mexicans are at the table.
Kevin, one of the questions that Steve Leisman had asked earlier today was, have you done any kind of economic study or report on the impact of these tariffs for the president or even for your own group?
Well, I can't talk about what I do or don't do for the president, but I can tell you that whenever there's a decision that the president's made, and that I'm involved in it, and I definitely was involved in meetings where we were talking about this, then, costs and benefits for whatever the policy is are presented to the president.
Can you walk us through the economic impact as you see it?
I think that big picture, that right now we're hoping for, positive talks. And I think that if you look at what happens...
I imagine somebody says to you, if this is prolonged for 6 months, if this is prolonged for 12 months, this is the impact on the U.S. consumer, this is the impact on GDP. I hope somebody's done the math on this.
Yeah, I don't want to talk about what I have or haven't talked to the president about, but I can say that if folks out there are tuning up their models to really work on it today, I think that one of the things you see is, especially in the near term, the impacts are much larger on Mexico than on the U.S., and I think that the intent of this is to solve a very, very important problem that the president's focused on, and I'm really heartened to see the Mexicans are coming to town to talk about it.
Right now, the likelihood that a week from now that they go on, do you think that's 90%, Kevin? Do you think it's 50-50? I mean,
I'm not going to give a percent that I think. I think that if you look at currency movements and tariffs, that you can model what the market thinks, and the market definitely doesn't think that it's guaranteed that they're going on right now.
The market does not think.
The market does not think that.
One of the criticisms is all that hard work that you worked, you blew in the face to get tax reform and deregulation. If the president thinks, well, I've got sort of some money to work with, and I'm going to solve some of these other problems because things were going so well in terms of, I don't know, stock performance had been pretty good until the last 6 weeks or so, and GDP, unemployment, things like that. Do you agree with that assessment that I'm going to fix some other problems because I've got some leeway economically, or is it make no sense to reverse all this progress that's been made by putting the two separate issues together?
Well, once again, first quarter was 3%. Right now, real-time estimates of the second quarter are that they're in the 2s, and it's kind of a normal ebb and flow of inventories and trade, I think, that's causing that slight blip down. And so the fact is that we're still looking at about a 3% momentum going forward for the year. And the upside for that is that we reform our trade deals. And the OECD put out a study about a year ago where they suggested that there could be a big positive impact on growth if we could actually move forward with the deals. Now, I know that we're all disappointed with the fact that the Chinese talks got very close to the finish line and then stepped back a little bit. But I still think that the idea of trade reform is a really positive one, and the president's right to emphasize it in the trade space.
Did we backtrack on anything? Or what do you still? I mean, do you know of anything that the Chinese are now saying that we pulled out at the last minute with some key provisions? Is there any truth to that, or is it? I'm speak.
I'm hopeful that at G20 that the president will have a chance to address that with his Chinese counterpart. And I think that when there are negotiations going on, then sometimes people get surprised at how adamant Joe is about this or that, and so I think that in the end, our sense was that they were pulling back from things that they had agreed to, and I think we'll stand by that view. But negotiations are tricky business, and I think that it's right for them to try to proceed forward now without necessarily hard feelings.
What's your forecast for a recession? Is it likely next year? A lot of people are coming to that conclusion, and the bond market seems to at least be a red flag that could be a possibility. What do you attribute, what's going on in the bond market, and then answer about the recession?
Well, first, I think that if you look at real-time recession indicators that don't use interest rates, and Marceli Chauvet, CHAUVET, has something at the St. Louis Fed that's a real-time probability of recession indicator that I use all the time, and that's really right at about 0, which means that the odds of a recession, I think, going forward this year are pretty close to 0. If you're looking at the data. But if you look at the interest rates, of course, those models can be probabilities that are north of 0.5. And so it is something that we're puzzling over. And I think that part of the problem is that there's kind of a global deflation setting in because of a weak economy in Europe and a weaker economy in Asia, and that global deflation is putting downward pressure on medium-term interest rates and creating the yield curve inversions that are setting off the alarms in these models. And so I think that if you think that the European slowdown is going to spread to the U.S., then that would follow. But we have so much momentum here in the U.S., and we're seeing strong income growth, strong output growth, high capital spending. I just don't see the European slowdown spreading to the U.S. right now.
Kevin, if that's the case, why do you think the Fed funds futures are now basically baking in a rate hike this year and potentially 2?
Rate cut.
I'm sorry,
rate cut, yeah.
Rate cut this year and potentially 2.
Well, I'm not giving the Fed advice. I haven't done that.
I know you don't like to give Fed advice, but the market is seeing something a little different than what
I might give them advice in a couple months. I don't know. But right now, I think that the fact is that if you look at inflation, it's really tame and probably headed south. And so what markets are thinking about is probably something related to inflation.